Hey YouTube, this is Zach with Achilles Financial, and today I want to go in depth onto how you can get paid to buy stocks. And today I'm going to be using Delta to illustrate this example. And right from the get-go, I want to just let everyone know this is not a trade that I will be doing. I personally am not a fan of the airline stocks as a long-term investment. However, I know that a lot of people on this channel are and have some form of holdings. So the walkthrough that we're going to do is how you could follow this trade exactly as I'm going to post it and get paid to buy Delta stock. And the way that we're going to be doing this is using a cash covered put. And so what you can do is you can sell puts. And what that means is that you are going to be able to sell the option to that you will buy 100 shares from someone at a designated price. So the reason that I like Delta today is because they recently came off earnings along with their broader airline industry, and they are down a little bit. You can see just over the past 5 days, they had a fairly significant decline going from a high of around the $33 mark all the way down to where they're at now, around $31.29 in the post market as of the timing of this video. So this gives us an interesting buying opportunity, but this is also where they've kind of been trading in a range. Again, they've kind of hovered around the $30 to the $32 mark with a few dips below that. But even on the year-to-date scale, again, this is a stock that was trading north of $60 coming into this, and then they hovered around the $20 as much as to the $30 range. So we're trying to determine if I want to get into this as a long-term investment, what is going to be the best way to do so. And this plays into a broader strategy that we'll go more in depth in at a later time, known as the wheel. But today I just want to talk about cash secured puts. So what I'm going to do is I'm going to hop over into Thinkorswim, which is TD Ameritrade's trading platform, now that we have an idea of what the range looks like, and make the decision as to whether or not we want to go after this in a long-term investment and how to get paid. Now, I do want to just leave this on the screen right here to show that these are the opinions of analysts regarding Delta stock. We've got New Constructs, who's giving it a 4 out of 5 in terms of 1 being the best, 5 being the worst. We have the research team in a reduced position, the Street, which is Jim Cramer's group, in a sell position, as well as the CFRA in a hold position or a neutral position, and then Credit Suisse has a outperform rating. And that's interesting that I see that rating is since November 18th, but I may want to look at some of the information included in these reports. The reason I highlight this page is because this will give you a much better overview over Delta specific metrics and why these companies are making these opinions. And all of these are pretty recent from what I see right here. So let's dive in over in Thinkorswim. So we are in the Thinkorswim platform, and I am going to be utilizing the paper money functionality in Thinkorswim. I think this is one of the best advantages to utilizing TD Ameritrade as a partner in your trading career. And as you can see, what we have here is just the Delta chain. This is their pricing over today. I have it set on the 5-minute. Let's drop that down into 1 minute because we really want to be able to see those moves. And they did have the big run up. The best time you're going to get any pricing is on big downswings like what you see here. So this is when you go from a position of strength to a big sell-off in a very rapid time period. So that's when you're going to get the best price on cash secured puts. However, if you're looking at Delta and you say, this is a stock that I would like to own and I'd like to build a position around, then what you can do is you can go here and hit sell and puts. So right now, this is for tomorrow. What I would look at is something with a little bit of time. Now, what I think is going to happen is you're going to see a big increase in volatility during these 2 weeks, one being October 30th, the other being November 6th. And that is because the election falls right in between those at November 3rd. So I want to have my positions made prior to this date so that I can make an informed decision based off the results of the election. If I go to October 30th, you can see that I now have a put pricing here as well as the pricing that you see here. What this is going to do is it's going to require you to put up $3,200 of collateral. So as you can see here, it says the buying power effect it's going to require me to have on collateral $3,035. And the reason for that is because right now it's saying I'm going to get paid $165. Let's go ahead and put that in the middle right here, and you can see that this has changed to 3,022. So what this is doing is it's saying that you are going to require the price of whatever your sell point, or rather buy point is. So at $32, you're going to multiply that by 100 shares. So that's going to be $3,200. And then you're going to take away what you're getting paid, which is this $178 that you see here. And you can see that that's been reflected at this point in time. So to be able to do this trade, you are going to have at least this much money in your account, whatever's being presented here. Robinhood will tell you the same thing. So when we're making these trades right here, what this is saying is if on October 30th, 15 days from now, if the stock price is under $32 a share, then I have to buy 100 shares. And so right now you're saying, well, Zach, what if I don't want to do that? I get it. Totally makes sense. However, what this enables you to do is you're getting paid $178 to buy these stocks for under $32. Now, this is how you win on this trade. So if the stock plummets, then you're going to lose money because you're still buying 100 shares. However, on the reverse side of that, you still own 100 shares. So this is on that transaction, the value you're losing, but you still own equity. Now, on the reverse side of that, what if I wanted to look at the calls and I wanted to then purchase or sell a covered call because I have that stock? You'll be able to. But again, we'll kind of get more in depth at that point in time. So this is a way that you can get paid if you say, hey, I like the company, maybe I don't like the price. So let's say that you don't like the price right now of $31.34, but you say, hey, I do like it under $30 a share. Then what you're able to do is set it to 30. Again, the price isn't as high because the probability has gone down, but you're now able to purchase this or get paid $78, which means that the only way you lose on this trade is if the stock price goes all the way down to $79 or $29.22. So there's a lot of value in being able to trade these. What I'm looking to do is play the volatility. This is coming off of an uptrend going into the end of the day. So if you sold this and it was $32, then the pricing would obviously be higher. So this is a key way that you can get paid to buy your stocks. Now this is Delta, which has a little bit more of a push right now towards volatility, is why you're seeing the pricing here. And I think it's a good example because I know it's at a price point that a lot of us can invest at, as well as a company we anticipate being around for a long period of time. Some of these other companies that we can actually play the volatility a little bit more, such as a Tesla. If you say that you want to get involved in Tesla and you have $40,000, and the reason I highlight that is because this is a company that trades at about $450, but they have very, very high premiums. So if you say, hey, I'm willing to make a sell here, if you go out to October 30th and you have the capability to invest $40,000, someone will pay you $1,025 to actually go out and make this trade. So they're paying you that much, which means you really only need $38,000. But if you're someone who really wants the company, you have the capability to do that. Just to showcase how ridiculous some of the valuations can be for Tesla, that was at $40,000, but even if you go down to $300, someone is willing to pay you $60 to buy their stock at $30,000. So this is an easy way for you to just generate income if you have a lot of cash, but you're not really looking to buy at this point in time. This is one of the reasons why I like selling cash secured puts, because it allows me to get into a stock if it ends up going down and it's at a price that I like. However, you also risk the fact that the stock could go up and the only thing you walk away with is the cash you were provided. So it's a good opportunity and something that I think you definitely need to make sure you have as part of your arsenal of investing. On the reverse side, if you guys are actively using this or you have good ideas for these trades, please drop that in the comments below. And if you found this video helpful, please leave a like and subscribe. Thanks everyone. Talk to you later.